Charles Ireland, Group Managing Director, EABL. First of all, let me commend you on the results you released last night and this morning. If I can firstly just start with the big numbers, Charles. Turnover growth was strong.
Yeah, Ali Khan, media star, friend to the celebrity world.
Yes,
Great to see you again. Yeah, big numbers. Overall, H1 plus 9% in revenue, plus 12% in profit before tax. Off quite a strong base, so a good solid performance. If I kind of break that down into Q1 and Q2, our Q2 was stronger than Q1. So we had a strong Q1, a stronger Q2, so we've got good momentum. I think we're in a good place. There's no need for complacency, and we're not going to kind of relax, but we're in a good place after.
So what struck me, looking through just at the first glance, was strong cost control as well. Your cost of sales grew far slower than revenue growth. You took down, I think, some expenses. So would you classify this as a sort of cost containment 6 months as well, or?
I would see us as getting a bit of a performance dividend from all of the hard work that we've done over the last 18 months. As we talked about previously, we've restructured the business. So we've moved away from having a really big group function, making decisions on behalf of the markets, to a much smaller group function and decision making pushed down into the markets. So that's enabled us to eliminate duplication and increase accountability, which I think is a great thing.
You've seen a more responsive business?
Yeah, so you know, when you've got people at the head office creating actions and activities for people at the market level to do, it's a little bit further away from customers and consumers, and therefore those decisions aren't always the best decisions. And then on top of that, it creates a need for a conversation between head office and the markets. By pushing the decision making into the markets, I think we make smarter decisions, and because there isn't the iterative loop, we make quicker decisions, so we're more agile. And there's a performance benefit as well because we save cost. So we've got better decisions quicker at less cost.
Fantastic. 2 quick points just on that. You made a very interesting comment about making your employees think as owners of the business in that presentation. Is that tying in with this new sort of,
absolutely. We've got kind of key kind of behaviours and a cultural approach that we're trying to get into the business, and we want a real kind of ownership mindset. So for instance, when I go into a meeting room and I see a TV left on because somebody's made a presentation and they haven't switched it off, that is an example of people not having an ownership mentality. Because if I go to your house with your very impressive hedge into the front room,
Charles,
I'm
I
sure
have a great fear of Charles because he lives next door and he's always worried about my hedge.
I'm sure that if I go into your TV room and there's nobody in there, your TV's not going to be on, right? Similarly, we want the TVs to be off in the meeting rooms in the office, and also.
Do you think that cultural change is, is that like what's that? Rudolph Giuliani's New York policy, where you
the broken windows thing.
Yes.
Yeah, look, I think we're on the journey. I think that it's going to make a lot of difference. I think that the people in EABL are going to take more pride in their actions and activities than they would be if they thought that they're acting on behalf of a third party and they care less about it. So I think that it's going to work very well for us. I think we're at the start of that journey. Closer to the start of the journey than we are towards the end, but it's work that we're doing and we're seeing benefit already, and I hope that it'll accelerate.
Before I go into this, I want one other thing I picked up on. Your chairman was speaking about geographical expansion. Did I hear him correctly?
You did hear him correctly. Yes.
What are you thinking of?
I think his meaning was not to go outside of East Africa markets that we're in already. His meaning was that quite often in our markets, most of our business is in the urban centres, and there is an opportunity to have a broader and deeper coverage of the marketplace. So if I take, for instance, in Uganda, we currently cover, I think it's 18,000 outlets, which is in Kampala and the biggest cities. But we've identified there's another 10,000 outlets that we don't call on. We don't send any product to, we don't send any salesmen to. So when he was talking about geographic expansion...
So you're penetrating deeper into the country,
yeah.
Are you? Yeah. Now can I go,
Absolutely.
Charles, to the, obviously Kenya still 61% contributed to the revenue. This is the elephant in the EABL room, isn't it, really? Tusker elephant. 3% revenue growth, but you told me if we stripped out Senator, we'd be at 15. Was that right?
Yeah, I didn't tell you that, yes. But what I did say was 3% revenue growth in Kenya yes. would have been 11%.
11%. Yes.
If the Senator was taken out of the right. numbers, because Senator was such a big distortion on yes. the Kenya performance.
And then the other thing I noticed was Tusker was flat, according to Joe, which then tells me that, and then you guys were saying Guinness was a very strong performer. So has there been significant Guinness outperformance?
Yeah. So if you look at, it's actually outlined on the next sheet. We classify Guinness as a premium beer.
Yes.
And we classify Tusker, Serengeti and Bell as mainstream beers. And we are seeing more rapid growth in premium than yes. we are in mainstream. I think a couple of things in there. First of all, there is a general shift towards premiumization.
Yes.
I think we're a company which is good at premiumizing, and if you look at the past history of our performance, we've been moving people up the kind of value chain. So I think we're good at premium. I think that the other thing is the mainstream is a really, really big segment for us, and therefore getting a shift in the really big base is
high
more
base effect for Tusker.
Yeah, it's more difficult to really get it moving. If and when we get it moving, though, it'll have a very significant impact on our overall kind of generation of performance.
But you were very emphatic about Guinness, which, by the way, I tried after you made me and gave me such a fine tasting. But it's been a strong standout story for you, hasn't it? Yeah. Is that the Premier League, and is that sort of got other touch points? That
it is. It's all of that. All of that. So our Premier League sponsorship has been working so well for us. Whenever I sit down on a Saturday to watch Chelsea yes. beat some other team, I love the fact that there's the Guinness sponsorship around that. So I think that's worked really well for us. But one of the things that I'm most proud of is that the team didn't leave it at
yes.
sponsorship. What they did was they said, okay, let's excite consumers yes. and customers in bars yes, by having some activity that's themed around that. And we've had a piece of activity called the Get Booked campaign. I won't talk you through the details, but the response to it has been phenomenal. Yes. Phenomenal. But it's not only about the marketing. I think Guinness is about the heritage. It's about what the brand means to people. It's about its distinctivity, including about how it tastes. And yes. some people are initially intimidated by Guinness because it's the kind of bittersweet taste they find a little bit challenging. But once they get over that initial kind of taste barrier or concerns, they can quite quickly kind of find it really delicious.
And you were telling me last time that actually it's of a stronger alcoholic quotient in Africa because it used to be transported from Ireland.
Yeah, so 250 years ago, when the Guinness family was still running the business, they decided that export was a good way of growing their business. So they used to put Guinness in barrels or in bottles onto ships and ship them around the world, including to Africa and to the Far East. And on the initial shipments, they found that when it turned up, the product had spoiled yes. through the motion of the ship and the different temperatures that the liquid was exposed to. By the time it got there, it wasn't very nice to drink.
Yes.
So the brewers had a look at it, and they decided that a way of making the product more transportable was to increase its increase its alcoholic content and the bitterness level just to make it a more stable product. So if you drink Guinness in Ireland or in the UK, you'll be drinking a 4.2% ABV liquid with lower bitterness and lower sourness. And here it's I think it's 6.8 or 7.5% ABV with higher bitterness, higher sweetness, higher sourness. So broadly it's the same kind of proposition. I suppose it's a little bit like, you know, a BMW 7 Series or a BMW 3 Series, you know, different engine size, different kind of comfort factor, but still at its heart, still the
but congratulations on that, on the Guinness story. Can I touch on, before I move away from Kenya, you know, the Senator story, obviously, Charles, everyone's been obsessing about this story for more than 24 months. It's been a big story, big part of your revenue 2 years ago. Listening to you this morning, it sounded to me like you were shrugging it off, that there had been some emotional investment as an organization in this, and an effort to sort of fix it, but really now irrelevant to the shareholder, and Charles at EABL is looking at other things.
Yeah, was that the impact?
That was how it felt. It felt like it felt you made a genuine effort, but you were now quite sort of, you know.
Yeah. Okay. So let me kind of go through those things. I think that Senator was created for the best possible reasons, and it was created because Kenyans were drinking illicit alcohol. They were exposing themselves to profound health risks, and it was having a huge consequence of the health of the Kenyan nation. And Senator was created out of the wisdom of saying, if a respected business like EABL could create something of low cost, just above the alternative in illicit, then potentially people could be persuaded to trade out of illicits and into the formal sector, and that would be a good thing. It would be a good thing for the consumers. It would also be a good thing for the retail sector, because they would be able to come out of the illicit informal sector.
It was actually transformative.
It was transformative across the stakeholder group. So I'd start with consumers. Good for consumers, right? Because alternative, they're drinking in drinking dens, straws out of a shared bucket of who knows what, right? So good for consumers, good for retailers, because they were able to develop a retail environment, which, you know, quite basic.
At the peak, you had 12,000 retailers.
Yeah, so we developed a network of 12,000 retailers who were offering these consumers who would have been in drinking dens otherwise an alternative environment to drink a safe alcohol. And then obviously distributors were serving those retailers. We were serving the distributors, serving the retailers, serving the consumers, and we were buying lots of local raw material to convert into Senator. And the other part of the equation was the Kenyan government, through the Treasury, was getting VAT on the sales of Senator. It was getting corporation tax from EABL. It was getting income tax from the retailers and the people that they had employed, and the distributors. And I think that you go back 10 or 11 years to when Senator was created, incredibly progressive move, I thought, for Kenya. Incredibly progressive move. Now, when that equation was then thrown out of balance by excise tax coming on, which created...
What was the amount of excise tax?
The intent was to create extra revenue from those consumers of 6.2 billion shillings a year. And that meant that the retail price of Senator went from between a range of 21 to 25 to between 40 and 45.
Right.
And
nearly doubled.
Yeah. And obviously it was too much for consumers to want to bear, and they moved away from Senator very rapidly. Since the kind of early days of the excise tax, we've taken it on ourselves to reduce the price.
So you've been doing volume, but at very low margin.
Yeah, so the retail price is now 30 shillings for a mug. So up from 25. And you might say, well, 5 shillings, it's not very much.
But it made all the difference.
But it makes such a lot of difference for those consumers. So they've gone back to drinking illicit alcohol.
It was 5 shillings that made the marginal difference.
Yeah.
That's extraordinary.
Yeah, so with all of that, I think 10 years of hard work have been unwound from a retailer perspective, from consumer perspective. They've gone back to drinking illicit.
What about the farmers?
The farmers, I was reading a report this morning about farmers saying that they've got no demand for their sorghum and for their crops, and they don't know what they're going to do. There's a huge kind of outcry in the farming community. And I think given all of that from a social perspective, put to one side the financial impact. From a social perspective, I would love to see the decision to tax Senator be reviewed. Yes. Now, obviously, I'm not a decision maker in that, but my position would be, from a social perspective, it's had far more negative consequences than it's had positive ones. If I then bring financial into it, from a financial perspective, the move was intended to increase revenue for Treasury. I think it's destroyed revenue for Treasury. They are collecting some excise tax, but they've lost VAT, they've lost corporation tax, they've lost income tax from across the value chain, and of course the farmers aren't producing anything now, so they're not paying any tax. So I think from a system perspective, it's destroyed value. If I then come to EABL and EABL shareholders, before Senator was taxed, and I've actually got a sheet for it, a couple down. Senator used to contribute 16% of total EABL revenue. Wow. The contribution level after we'd taken off production costs was, I can't quite remember the number, but it was below 10.
Yes.
From so 16% revenue, below 10 kind of marginal contribution. Where are we now? 4% revenue contribution, less than 1% contribution. So my kind of message to the shareholders this morning was, you don't have to worry about Senator anymore, because it's so small now for us. It's not going to meaningfully affect our performance going forward. So that was the intent of the messaging.
Thanks for that explanation. If I can now go geographically,
go for it.
You were bullish about Tanzania. You had some good numbers out of there. Up 17%, 12% contribution now, and that had been a challenge, Charles, because of the acquisition. It wasn't too long ago. You'll remember.
Yeah. So look, we bought that business three and a half years ago. We bought a great strategic asset. Presence in Tanzania is very important for us. The business has got production facilities in Dar, Mwanza and Moshi. We all know how geographically huge Tanzania is, and to have facilities across the country was important. And it had some good brand presence, including Serengeti Lager and Guinness and Tusker. Outside of that, though, the business was well below the standards that we operate to within EABL and within the bigger kind of Diageo company. So when we bought it, we embarked on a program to upgrade that business. So upgrade the breweries, upgrade the liquid delivery, upgrade the route to market, upgrade the marketing and other commercial activities, upgrade the compliance and standards. And we haven't finished that work yet. But whilst we were doing that work, we had to make some hard decisions about which areas to be doing business in and which not, and what have you. Had a distortive effect on our performance. I I was delighted with the first half performance. I thought that the Tanzania business is showing signs of responding really well to that work that has been done. And you know, when you're doing work like that, sometimes you think, is there going to be a payback? And what I was communicating this morning was we're starting to see the payback. So we've seen 17% revenue growth. We don't disclose the profit number, but we're solidly in profit. Made 6 months of continuous profit, more actually, and from a position where, you know, we had a great asset, but it wasn't performing for us. We've now got a great asset which is starting to perform.
No, well done.
Thank you.
And then if I can just finally go to Uganda, where I noticed Uganda Warigi. Do you want to tell us what this Uganda Warigi is? Because it's like so over 30% year-on-year gain. Yeah,
so I think the pronunciation is Waragi, but I might be wrong.
Waragi.
Uganda Waragi, I suppose, is a little bit like Kenya cane in Kenya. You know, it's a long-established kind of local heritage brand that nationals of the country are very proud of. And Uganda Waragi is a much-loved brand in Uganda, and the diaspora actually ask for it around the world.
You're exporting to the diaspora for your products?
Yeah, a little bit. I think there's more that we could do.
I think there's a lot better, isn't there?
Yeah, there's more that we could do. So Uganda Waragi is what we would term one of our premium core brands.
Yes.
And as we've talked about in the past, we're clear that working on 6 areas, including premium core brands, will be fundamental to the success of EABL. So we've been working on Uganda Waragi, we've been working on the formats, we've been working on the marketing support for it, we're doing some work on the packaging as well, and the brand has been responding very well. So I was pleased with the performance of Uganda Waragi. I think there's still more work that we can do. We're looking at a new bottle, which will be a significant investment, but I think it would be worthwhile to differentiate from other brands in the market. Outside of Uganda Waragi, though, in our UBL business,
it was a strong performer.
It was a strong performer, and the other brands in our portfolio, we've got Bell in our portfolio, and I've been disappointed with the performance of Bell over the last 2 years since I came to East Africa, and we've been looking to try and strengthen performance of Bell. We've got some new marketing activity. We're also looking to broaden and deepen the distribution, as I mentioned earlier, getting into kind of more areas of the country.
Doing that, as you sorry, just to interrupt you, deepening, increasing penetration. Are you using new models? You know, I know you're using things like M-Pesa. Are you using a hybrid model? Are you having to invent a new model in order to go deeper, out of interest?
Yeah, kind of yes and yes. We are doing new, we are doing different. We're also playing the same game better. So, you know, so the new and different might be setting up a distribution model which is operated by ourselves with a SWAT team of very highly capable sales guys to go and kind of blitz an area. Might be looking at a consignment approach to maybe some of the stocking, and then playing the same game better is about, we've got existing distributors with relationships with those, but by working with them on their ways of working, the frequency that they run routes, the size of the trucks that they put into those routes, what they ask their sales guys to do, a whole load of ways of working points, we get a performance delta. So we're doing some new work to get into new areas of the country, and we're doing some work to enhance our existing work. One of the things that gives me real confidence in Bell going forward is the fact that its brand equity is much stronger than its market share. So that leads me to believe that by upgrading the commercial activities, we've got some latent demand there that we can access.
That's interesting. let me go to the final bit of the puzzle, which is your fastest growing piece of the pie, which is telling me that the South Sudanese, whilst fighting each other, are drinking lots of beer, Charles. Up 100% EABLI.
Yeah.
How would you know? Is that South Sudan? Is that pure South Sudan, or is it? Would you say there's?
No, it's not purely South Sudan, but it's a lot about South Sudan. So, yeah. In South Sudan, we've had a presence there for a long time.
Yes.
Our brands have been available to consumers in South Sudan for a long time, longer than other companies' brands, and we've got a healthy market positioning as a result. We haven't always had ease of market access, and I think I talked with you once before that our route to market to South Sudan used to be that we would go and we would take cash off of a distributor or a wholesaler and say, send a truck to Nairobi, we'll give you the product when it arrives, and then you can drive it back again and then you can sell it. That isn't an optimal way of doing business. So we've now opened a distribution depot in Juba, and we either ask the customers to come to the distribution depot, which is 10 kilometres rather than 800 or whatever. So we either ask the distributors to come and collect from Juba, or actually we might even deliver ourselves.
Yes. And this unlocked a lot of.
And this has unlocked a lot of potential. We've done some other things. So we've also switched from bottles into cans.
Yes.
And retailers and consumers quite like that switch, so they like having the flexibility and the portability of a can, and we've increased our marketing activities in South Sudan as well, and the combination of all of those things working for us.
Charles, you know, you brought up this issue about currencies, and so I mean, South Sudan is a good segue into this currency situation. How are you coping with that? Because you know, if you look around Africa right now, we're seeing a huge amount of currency volatility.
Yeah, so I think there's something about volatility. I think there's also something about availability.
Yes.
And from an availability perspective, we can do even more trade than we're doing in South Sudan and in Rwanda than we're doing at the moment. Unfortunately, we can't always convert that trade into a hard currency or into Kenyan shillings or into the US dollar, for instance. And that exposes us to the risk of devaluation and never being able to get the money out.
Yes.
So we've got governors on our performance, governance on our performance, so that in order to do some more business, we need to change out of the currency that we've currently got.
Okay, so it limits the growth of the business according to liquidity.
Yeah, so if we were able to secure kind of free flow of currency, I can grow that business even more rapidly than it is at the moment. We've got a similar situation in Rwanda as well at the moment. The Rwandan franc, obviously we can trade in Rwandan franc, but then converting out of Rwanda is difficult at the moment. The other currency challenge that we've got is that currencies in East Africa are generally weakening against international currencies. And then within East Africa, the bulk of our trading and all of our reporting is in Kenyan shillings. But Uganda is 18%. Yeah. So we've got a weakening of the Ugandan shilling, a weakening of the Tanzanian shilling, and that's creating some within the EAC issues for us, particularly as we've got a network of breweries and we've chosen to supply Uganda with some of our products and rather than brew it in Uganda. So what are we doing about that? There's a couple of things. One is we have actually 18 months ago decided to shift our procurement strategy from cheapest anywhere in the world to if we can possibly access it in East Africa, we build the market in East Africa, and we've been doing that for local raw material for a while, even though we have been buying from overseas. that wherever possible now, even if it's a little bit more expensive, we buy local, build the market. Over time, prices will come down, is our thinking.
Yeah, right.
It also helps build the economies in East Africa, and we're an East African company, so we get a side benefit. So buying local is one of the things that we've been doing. The other thing is that we're looking at our supply arrangements, and we're saying, is it right that Uganda should be buying from Kenya?
Yes.
And actually, maybe what we need to do is we need to increase the breadth of the products produced in Uganda or produced in Tanzania. And then we've got export opportunities as well now. For instance, we're looking at export of some products out of Uganda into Tanzania now, which would have been much less viable before the fluctuation in the currency. So I think that net will be okay, right? You know, it will have an impact on our business, but it's not going to be profound. What we've got to do is we've got to manage our business, and we'll be doing that. So, you know, I think that there will be some opportunities, and we'll try and identify those and then capture them.
Can I go into the products? You know, I always look at your reserve spirits. I start off with that because that to
Rumour has it you're one of our best customers.
I am actually. You even once sent an angel with them.
Thank you for that.
No, it's a pleasure, and it's such a fantastic suite of whiskies you got.
Yeah.
Plus 67%. I mean, we had a triple-digit gain not too long ago. Big gains. I know it started from a low base, but it seems to me to be sending some kind of signal to us.
Yeah, look, it's becoming more meaningful.
Yes.
And that's part of the strategy. If you think about that kind of 6-point strategy,
yes.
One of the points is to win in reserve in every market.
Yeah.
And you kind of think at the start of that strategy, well, why are you bothering with that? Why don't you make it a 5-point strategy rather than a 6-one? But then 2 years down the line, it starts to get more interesting because the base is so much bigger. And you know, I talked before about East Africa is our turf. Right?
Yes.
We've been here for 92 years.
That's right.
I think that we could be accused of sleeping at the wheel or being complacent if we're not taking a strong leadership position in there, given how well we know the market, how well we know the consumers, our presence in terms of our kind of structure, our routes to the market, our depots, our offices, all of the things that we've got mean that this is something that we can build into our product offering in a much easier way than a new company coming in and setting up from new. And therefore we've got much more of a right to win in that area. Yes. And it would be remiss of us to not be developing that. Well, I hope so. You know, there are, I can argue against my own strategy, right? So I can say, but you've got so many things you're working on. You've got all these brands, you've got all these markets. It's a relatively small part of your business. This is kind of small for you, whereas another player, French company or Dutch or whatever, because they're so focused, they can make more traction. So if I were a small company, I would be arguing differently. But from our position, we're looking to win and win big in there.
And just staying in that spirits continuum, because am I wrong in saying that EABL was slightly counter-trend to Diageo because it was a much bigger beer company a few years ago, and spirits now is a big growth curve, but relatively recent phenomenon. Am I wrong?
Yeah. So look, EABL I think is about the biggest beer business in the Diageo world. We're one of the biggest businesses from a beer perspective in the Diageo world. And therefore, for Diageo, for EABL shareholders, it is important that we win in beer. Yes. Important. And we will never neglect beer. And as you can see there, some of the growth rates in beer, I think, are quite impressive. So winning in beer, growing beer is important for us. By the same token, as just described with reserve spirits, there is an opportunity here as East Africa modernises and develops. East African consumers will want to access international premium spirits because that's what happens everywhere in the world.
Yes.
People get interested in that
And
stuff.
of course you've seen
Just like they get interested in Jaguars and
Yes,
you know,
yes.
smartphones and stuff. They will get interested in products in these categories, and therefore it is a big shareholder opportunity for us. And we've got a strong leadership position in beer, and we want to develop a strong leadership position in spirits as well.
If I can just tag back to spirits, because we were looking at the top end, you've been highly effective in what I would call, well, I don't know, what do you characterize it? The mass market. Jekyll, gin.
Yeah, so we would call that emerging or value.
Emerging and value spirits. Are you seeing similar type of traction in there?
Yeah, look, our growth has been satisfactory. Has been one that we've been very happy with. It's not a focus area for us. However, it is an area where is becoming much more meaningful for us, partly because the EABL name is really well trusted in the marketplace, and because we've got other brands in our portfolio, we're going into these outlets and we're seeing, you know, brands from kind of small producers with variable quality, and there's an opportunity for us there to capture revenue and do it with you know, decent margin. So we've been growing in those areas. It's an area that, you know, we think about quite a lot, about, you know, how to focus the organisation and where we want to win. And at the moment, it's somewhere that we're very happy to capture that growth alongside the growth that we're seeing elsewhere.
Let me go back to beer. You know, it's an iconic story. EABL, Tusker Lager. You know, I go all over the world sometimes, and you see that Tusker, and you feel proud. You know, and I think you described it as, what was the two things about Waraji you said? It's got equity. I think you were describing, and I think that's got it. Yeah. You know, that's still the iconic brand, right? That's still the big piece of the revenue. Yeah. And then you've added all these other iterations, new beers. Do you want to talk us through what's going on in your beer world?
Yeah, so look, I think probably there's four things going on. First of all, we are seeing a growing demand from consumers for more premium products. Premiumization. So 100% malt products, you know, more differentiated from a taste perspective, that you would say that Guinness is, more premium offerings and expressions, and you know, we're kind of working to make sure that we capture a good share of that. So, for instance, we've just relaunched Tusker Light. Yes. We're looking at other innovations, either as brand extensions, like for instance Serengeti Platinum that we've launched in Tanzania, or new to world brands. So premium beer is in demand from consumers, and you kind of get that, right? You know, as kind of people feel a bit wealthier, they are wealthier, you know, they trade up. You saw this a lot in Asia, but I remember you telling me that the speed was not happening as quickly as you'd seen it in Asia. Yeah, look, I've got to be careful about what stuff I'm telling you, right? Because you keep on repeating it back to me. I remember these things, so I was just curious. Look, I think that, you know, getting back into the cultural point that we were talking about before, I think that, you know, EABL has got to be a company which kind of acts like an owner. It looks for opportunities for business development, and it acts on them. So just like kind of turning off a TV when you leave a room, if there is consumer demand there, first of all, you should be looking out for it, and then secondly, you should be doing something about it. And I think one of the things that we could accuse, or we could criticise ourselves for, is that we haven't been mindful enough about how the market is moving, and we haven't done enough about it. So our innovation program has been a bit sleepy, really. We haven't done very much, right? So now we're trying to really understand the way that consumer demand is moving, the way that the market opportunities are opening up, and getting in there early. So one of the things you're seeing is a growth in premium sector of the beer market. I think we're kind of catching up with the demand that's already there. So premium beer is an area of real interest for us. RTDs again is another area.
That was a big
yeah,
number,
so
50-something%.
59%.
Yes.
Yeah, so RTDs again.
What's coming into RTDs? Is
So
that Smirnoff Ice?
Smirnoff Ice, Snap, Smirnoff Double Black and Guarana. You know, and there will be some more products coming into that sector as well.
Is that more targeted towards women, or is that just my own?
I could take you to a couple of bars with big burly guys who are drinking that, and yeah, I could say this guy thinks you're drinking a woman's drink. See how far you'd get on there.
Promising that against that bar near your office.
But look, I think it is absolutely true that women drink in that category, and by the same token, men also consume RTDs. I think RTDs offer a different experience to beers, and you know, the taste profile is, you know, very important in that space. So RTDs are benefiting from some work we've been doing on price, some work we've been doing on liquid, and some work we've been doing on innovation. And then into mainstream beer, we've got, you know, what we call our core mainstream brands. So Tusker, Bell, Serengeti. We've got other brands in that space as well. So we've got Belosi, we've got others. I'll remember Whitecap. And what
a lot of people feel that you don't distribute Whitecap enough. I see that on social media.
Right.
I find it difficult to
do. So what we're doing on mainstream is we're trying to make sure that our marketing monies are well spent to develop the brand health of the brands. And let me give you an example. In Kenya, we ran an activity called Tusker Project Fame for several seasons. And when it started out, it was new and different. And it did some really good work for us. And then in the last couple of seasons that we ran it, it was still interesting. People watched the TV show and stuff. But because it was Tusker Project Fame and it had been running for several years, the Tusker support just became a little bit generic.
Yes.
And it was having less impact for us. So last year and this year, we haven't done Tusker Project Fame. We've given it a rest. And
so you've made some marketing calls, basically.
So what we do with our marketing activity is we evaluate past activities, and activities that have had high impact, we think, okay, we'll do more of those, or maybe spend more in that area. And activities that have had low impact or no impact, we try and stop. And I think on our core mainstream brands, we'd got into a position where we were spending money, but it wasn't having a lot of effect for us. So what we're now doing is we're revising our marketing programs, and we're looking to redirect the money into areas where it'll make our brands more vibrant, more relevant to consumers, more dynamic and more energetic. And we expect that the dividend from that will be a performance dividend, where, you know, we'll get those brands back into good levels of growth. I've kind of talked about our mainstream brands as being okay performers. No real disasters in there, Ali Khan. No real kind of nightmare performance. They're okay. But we're not an okay company. We're a good or great company. And therefore, what I'm looking for those brands is to move them from okay to good. And then once we get to good, I want them to move to great. And, you know, I think that when we do that, we'll see the performance. The other thing is, yeah, they've got heritage and local pride, right? And, you know, whenever I talk to Kenyans about, wouldn't it be great for Tusker to be as appreciated in North America or in the UK as it is by Kenyans, people kind of light up and get excited by that. and I want the brand to be as internationally recognised as some other brands are. You know,
got a big market in North America. There are plenty of Kenyans there to be your ambassadors. Yeah.
So I think you know, our brands have got great potential in East Africa. And then in the same way that some international brands come and try and do business in my backyard, I'm going to take our brands to their backyard.
Well, right, we can guess where you're going then.
Why not?
I got 3 questions. You touched on the dividend, interim dividend was unchanged.
Yeah.
What I found following you guys these years is that people suddenly were surprised and taken aback by the amount of leverage that went on the balance sheet that was buying Serengeti. You know, these guys, shareholders have been with you for 30 years. They'd never seen you borrow a dollar. I saw borrowings went up 5.5 billion. Can we just touch on that? I mean, how are we doing, Charles? Are you comfortable with the debt, the rate you're paying on the debt load, where the debt load is? What, you know, what's the story?
Look, I'm going to ask you to have an in-depth session with Tracy Barnes. She'll talk through all of that with you. But the headlines for me are that I think we went from a lazy balance sheet where we were completely under-leveraged to putting too much stress into it. We've been working to get that back into good shape. We're a highly cash-generative business, and we can attend to those things. And we've been doing some things, like we launched a commercial paper program, which was, I think, the biggest ever in East Africa, or one of the biggest ever. We've got some more work that's going to be happening in the next 2 to 3 weeks, actually, which will be another kind of expression of the balance sheet work that we're doing. In terms of, you know, the coupon that we're paying on our debt, you know, I was looking at the bond market yesterday. The coupons are quite big,
aren't they? When the whole world's gone negative.
Yeah, I know.
Denmark, you take out a mortgage, they'll pay you
13-14%. I know. I'm thinking about taking mortgages out for my kids. Anyway, so I kind of look at those interest rates, and I look at the interest rate that we're paying on our intercompany and other debts, and relative to the market, we're in a decent space. Our intercompany debts are made on an arm's length basis, because you've got to respect the shareholders at both ends.
Is it about the 20 billion size, or
something like that? And you know, I think over time we might look to kind of rebalance our debt profile, so we've not got as much with one lender, and we kind of, but it's quite a friendly lender actually. So
it's the edge.
Yeah. So it makes sense from a number of perspectives, and you know we'll continue to look at our, you know, the totality of our business, so that it's structured in a way that our shareholders are really pleased with the way that we're managing our business and what we're doing. Coming back onto the dividend, if we keep growing the way that we have in terms of PAT, I think there will be an argument for changing the dividend at the end of the financial year. I think there's also an argument for not changing it in terms of conserving some cash, and you know, and maybe having a period where you've got dividend payout stability rather than dividend payout growth. It's not a decision we've taken yet, but you know, I think when you've got growth, you've got options, right? And we'll look at it, and we'll make a recommendation to the board what we think is the best thing.
And I think that you're seeing a good performance in the share price this year. It's strong.
So look,
a lot of momentum building up.
You're wise, right? Your commentary has been spot on. I've kind of been reading your commentary, and I think as you got initiatives globally like quantitative easing and very low interest rates, if overseas investors are confident in the currency environment, then they can access 30-year money for 1 or 2%, 150 basis points, or whatever it might be. It makes a lot of sense to invest in this region with the growth profile that we should have. One of the things that investors tell me that they like about EABL is the fact that we've been here for a while, that we've got established brands, that we've got compliance and ethics principles which are well entrenched.
You're a go-to stock. Anyone coming to the stock exchange is coming to you or Safaricom first.
So I think we've got a lot to offer investors, and and we're trying to kind of repay that that faith in us by managing the business well and generating returns which are in line with the ones that we announced yesterday, and hopefully we'll get better.
Last point you made in that media briefing.
Yeah.
You see, I paid attention all the way through. You said, look, the business is, I think you used a different phrase, but I remembered it as firing on all cylinders. Growth, you said you could feel the growth coming through. That was quite a bullish statement you made there, Charles. Shall we end up by saying you're a bull?
Should you end up by saying I'm a bull? I'm not quite sure I quite like that language, but
well, I think bullish about you're in a better place now than when we first, that you feel confident. It seemed to me, reading you in that room, was that you are confident about where it is, lots of growth, growth wind in your sails now.
Look, you're an expert at looking at businesses around the world and determining whether they're kind of good investment destinations or not, right? And I guess that when you look at businesses, you look at the balance sheet and the P&L and the past performance, but you also look at the way the businesses are set up from a management perspective, the core competencies and strategic assets that they've got. You think about the brand profile that they've got, the consumer profile that they've got. I kind of look at our business in similar terms, and when I'm looking at that, I think that destiny is in our hands.
Yes.
Yeah. So the future performance of EABL will be built on how we operate, and I think we're in a great part of the world. We've got fantastic growth levels from a GDP perspective, from consumer demographics perspective. We've got great kind of population kind of growth, and we've been here for 92 years. We've got the production assets that we've got the brands that we've got. I think we're set up to be successful. The key for me and the executive team and the rest of the EABL staff is to kind of respect that opportunity by taking full value out of it. And again, I think that over the years, sometimes we've not been progressive and aggressive enough. And what we're trying to bring into the business now is a kind of real desire to win and to perform. So the cultural shift we were talking about, the ownership mentality, we're trying to bring that into work every single day. And I hope that the next time we're talking about performance, it'll be another set of good numbers it's the next wave
my
of
theory,
development.
I think we're going to get a big stimulus. So I'm interested to see how your second half turns out, and whether you're a proxy indicator of.
So look, I think common sense would lead you to a position that where you've got a huge kind of discontinuity in the cost of living in a nation, which is kind of oil price, right? That should flow through into short-term consumer behaviour. Should do, right?
Yes.
Let me give you an example. I spoke to somebody recently who said, I filled up my car with petrol.
Yes.
And it cost me kind of 20% less than it had 3 months ago. I thought, I'm going to have a beer. Genuine conversation.
Yes.
Genuine conversation. And I think that people will really feel better off.
Yes, so do I.
And I think that it will have an effect of boosting the economy, definitely. I'm not seeing it yet.
Yes.
I'm seeing some of the benefit from a cost perspective, we're
you must be quite a big consumer of energy.
So heavy fuel oil for us, I think, is something like 7 million litres a year, or I might have got the number wrong, but we're quite a consumer of heavy fuel oil, both in the brewery and in our manufacturing plant. And obviously we drive a lot of products
Yes.
around the country, which incurs kind of logistics costs. So we're seeing some easing in our cost base. I'm not yet seeing consumer response, or I'm not yet seeing an uptick in the markets, but I'm confident it'll come. I think it will come.
I think it will too. Charles, Ireland, thank you so much.
Alan,
and congratulations.
Thank you.